just under 2 minutes here to go live. Thank you for joining me today. These Fridays seem to be coming so quickly every week. It's crazy. Okay, thank you. And we're almost ready to rumble. Okay. Hello and good afternoon. This was a short week for some of you. It was actually for me too. The week went very fast, especially since you have to cram 5 days of work into a 4-day work week, I should say. So it seems like overall, though, the weeks have been going by so quickly. I can't believe June is almost over. I'm not sure how that happened. I don't know. I don't even know where May went, to be honest with you. So I think I'm back in April. I don't even know. But all I'm saying is time is going quick, and it seems like the world is spinning a little bit quicker. But I want to thank you for tuning in and spending some time with me today. You are listening to The Financial Chick Show, and I am The Financial Chick. My name is Denise Nostrom, the CEO and owner of Diversified Financial Solutions, a full-service independent financial planning firm located in Medford. Your Financial Chick is here to help you make better financial decisions and choices to improve your life and reduce your anxiety and stress about money. If you want to know more about me or my firm, you can check out my website at financialchickshow.com. And also, if you missed any shows, you can click on the media tab on my website and listen to any of the past shows. Everything has a topic. We're also on Facebook and Instagram at Diversified Financial Solutions. So like our pages to get updates and see what is happening. So like I said, today is June 23rd. I mentioned the date because my dog, Haley, which if you're a client or have been a client for a while, or even, in the past 5 years, I guess, my dog, Haley, she crossed the Rainbow Bridge last January, but today would have been her birthday, and she would have actually been 20 years old today, which is amazing. And she was an amazing dog and lived a very, very long life, but I still miss her so much. She spent almost 19 years at Diversified Financial Solutions as my sidekick and my mascot, which other than me, had the most time under her belt at the company. So she was such a sweet pea, and it's very sad, but I wanted to just make that note. So to my little Haley. I can't believe June is almost over, like I said, and I also can't believe how chilly it's been and how little sun we have been getting. And if you know me and have been listening to the show, if it's short-term or long-term, this is my time of the year, but this, what we're looking at right now outside, is not really what I like. Summer officially started on Wednesday, and we've been dealing with fall-like weather. I take my new dog, Winnie, out in the morning, and I need a jacket. And the evenings are really, really chilly. So listen, summer, I know some of you love your winter and you love all that and the cold weather, and that's great. But summer is so short. So I do hope things look up soon, because I feel like I'm being ripped off, and I just really, I really want some good weather. I mean, really, we really go for it July and August, let's be honest. So we get 2 months versus the 10 months of all the rest. So, and unfortunately, though, with looking at the weather report, it doesn't look so good in the near future. So hopefully, and they tend to, no offense to the weathermen, but they tend to be wrong. So hopefully they are wrong, and we see some of the yellow stuff in the sky there, the sun. So it is prom and graduation time right now, so I want to congratulate all the graduates. Best of luck on your journey, whether that is that you're going to go work at a job, going to a technical school, or perhaps going to college. You are the next generation to make it happen, so, and you're going to make an impact, so let's do it right, guys and girls. With that in mind, for those of you that graduated from college, some of you may have student loans that have, now went into the real world like the rest of us, right? We all rush to get to the real world, and then we realize what the real world is, and my goodness, bills and taxes, student loan payments. So speaking of student loan payments, they are set to resume on June 30th. So I'm probably not the bearer of great news, but you have to know, you got to be in the know, right? That's what it's all about. So they had also reported today that 32% of people with student loans have balances of more than $125,000. That's pretty scary stuff, And when you talk to your grandparents and stuff, they bought houses, or even your parents in some cases, that were less than $125,000. So it's just weird how life evolves and the journey changes over time. But listen, set up a payment plan, be consistent, pay it off. It's your credit. You want to make sure you do the right thing and have good credit, because again, to buy those homes and to buy those cars, you really need to do the right thing. And unfortunately, Uncle Joe Biden promised the canceling of some student loan debt, but that may not be happening. So I know some of you had waited to pay, thinking, all right, I may be in good shape, but sometimes we hear things and it doesn't come to fruition. So you have to do what's best for you, and adjust accordingly. So for those parents or grandparents out there, you may want to consider starting a 529 plan for your kids or grandkids. It's never too late, unless of course the kids going to college now or in the fall. But we look at giving birthday gifts or Christmas gifts or Hanukkah gifts or whatever you celebrate. It becomes a frenzy of toys and other items, which eventually become thrown under their bed or thrown out because the kid no longer has any interest in the item or has outgrown the item. Or you're donating, and you should probably donate those things that are still in good shape. But, why don't you look at it a different way? Opening a 529 plan and using that money that you would have bought for the toy or something that you would have bought for the kid that is just a short-term thing. A 529 plan for college is really a lifelong thing. So if you open up a 529, buy one less toy, and use that money to open that college savings plan. There's a New York 529 plan that not only enables you to grow your money for the child's future, but you do it by having tax-deferred growth, meaning that you don't have to pay tax on that money every year, which is sweet. And if used for college or for technical school, is tax-free withdrawals. So it's money that you can put away and really never have to worry about paying taxes to Uncle Sam. So that's pretty cool. Plus, living in New York State, and again, you have to be the one to be putting into that. So whether it's a grandparent or the parent or an aunt or an uncle, that's also an option. You get a state tax deduction based on what you add to the 529 plan each year. So, we all hate paying taxes. So I gave you several reasons of opening this plan to help your child or grandchild pay for something that's so expensive and getting some tax benefits while doing it. So not too shabby. And you also can get free money by linking a program called You Promise. And you may see this, sometimes you go around the supermarket, they have like a little sticker or something by certain products. The You Promise program, way too much to explain for a short radio program like I have today, but it's something that you can link to the 529 plan, and by doing things that you would do anyway, whether it's buying groceries or going out to eat or buying, I use it for when I buy my supplies for my office, you get money, just kind of like almost like a air miles, like mileage thing, but you can use this for the 529. Any of these purchases, a portion of that goes to the 529 plan as you link it. So it's free money. I know I had a show a couple weeks ago. I don't even remember what my number was. I think about it since my daughter's 17, but I think I have just under $2,000 that was free money just by doing things that I do all these years. And hey, listen, everything matters. What is that? It's a couple of bucks, right? So you can actually set up an account with our office in the New York 529 plan for as little as $1,000, or you could set up an automatic savings plan for only $25 a month. I mean, anybody could do that, right? Every little bit counts, and you will be glad you did. It's such a great gift that's, again, going to last a lifetime. You know, the toys, they come and go. You know, I remember Elmo, that was my kid's favorite thing back in the day. Like, she just adored Elmo. But, you know, she's not, you know, taking Elmo to high school with her, you know, or college for that matter. So, you know, doing this 529 plan, especially during graduation, I'm hearing from all of my clients now, they're calling up and saying, I got the bill. Please send me X amount of money from that 529 plan. And I can just hear the comfort in their voice because they have the money there to do it. Again, you know, we can look at different plans that you have or different investments for that, whether your kid's younger or older. But listen, there's a plan for everybody. And even if every little bit counts, you may not be able to save for all of it. But let me tell you something, anything less that you have to pay as far as a loan is going to be a big win in anybody's book, you know. So it is exciting. All of the kids going to where they're going to go in their life, but of course enjoy their summer first, and then head off to college. And I hope that everybody has a successful one. And Patrick Medford had their graduation. I know they changed it. People were getting a little bit crazy, but they pulled it off, and it was amazing as usual. So I saw some pictures for that. But yeah, like I said, I mean, you know, this is one of the biggest expenses that you have, and if you can help them out, the kids, the grandkids, I'm sure they will be indebted to you. And it's for something good. It's not something that's worthless. It's something that's going to be good for their future earning potential, future everything. You know, buying homes and the whole 9 yards. So. You are listening to the Financial Chick Show. I am Denise Nostrom, the company's Diversified Financial Solutions. I help you look for financial solutions when you feel like there are none. We're going into the break, so stay tuned for more. Two minutes? Okay. All right, we got a 2-minute break, a little water break. I hope you enjoyed that segment. It's very timely. $529 is great. Like I said, if Laney is a little bit to make it a lot, and if you start early and use that you promise, you really can accumulate a good amount of money and just alleviate a lot of drama during this time of year, because you want to enjoy the graduation and not have the stress that how are we going to pay for the college bills as they're coming in. So it's all about planning, and it doesn't take a lot either, so that's a good thing. But we're going to talk a little bit about the market and what's going on there, and that the quarter's changing or going to be ending soon, and a little bit about artificial intelligence. I'm going to do a little bit of everything. 1 minute to go. Thank you. I hate this, I can't see who's on. Okay, thank you. Welcome back. This is Denise Nostrom, the Financial Chick. My company's in Medford, and you can reach me at 631-758-8691 or visit my website at financialchickshow.com. I'm here to help you on your financial journey. Over the years, things change, and I'm here to help you navigate all those changes. So we talked a little bit about graduation time, prom time, and if you have little ones or even teenagers, and you haven't started a plan for technical school or college, it may be a nice thing to do. You can set it up very easily at our office and just make things a little bit easier for the future generation, because my gosh, things are crazy, right? So speaking about crazy, the news just came, and I had the number 14 trillion in my head, but they've just upgraded that right now all of us, I don't want to say us inclusively, but people have $17 trillion in debt right now, credit card debt. And that really is indicative of what's happening right now in terms of the economy and the fact that things are more expensive. And, it's kind of a scary thing. And one of the insult to injury is that credit cards are never good. You never want to have balances because the rates are so high, but the rates are so much higher now because the Fed has increased rates, bringing the Fed funds target rate to 5.25%. So it becomes that snowball effect. It becomes a real issue. We talked a little about student loans too. Same thing. You've got this debt that if you don't keep up with or don't pay or late, it hits your credit score. It's just things that you don't really want to do. But if you're in that situation, which many are right now, take a good hard look at your situation and see where you're at. Look at your spending, what your expenses are. What do you need? What's the bare bones that you need? Sometimes you have to do a side hustle or maybe do a part-time job or something just to kind of get yourself not into a situation where you're going to build up a lot of debt. And one of the other areas that's a little bit crazy that we haven't seen in a long time is mortgage rates. Mortgage rates have now are over, well, they have been over 6%, but they logged in at 6.67% today. Housing prices are still high, but the housing market is kind of beginning to slow just a little bit. So the problem is that you got high mortgage rates, you got high house prices, and we all need a place to live. But it's just a really, really challenging time. If you're in the market for a house right now, it's really challenging. And it's all about that monthly payment. And I work with my clients from time to time. We sit down and we say, all right, if you put a little bit more money up front, what's that going to lower your monthly payment? Because that's the thing that's going to stick with you, right? So try to save. If you're saving for a house, try to save as much as you can to put down to kind of manage that monthly payment. Very interesting. The home sales have been down. Home sales have been down 20.4%, but the home prices are only down about 3.1%. So there's a real disconnect, I guess. Well, I don't know if it's a disconnect, but it's just that the things are starting to cool, but the prices are not coming down, which is really kind of interesting. So the stock market, it broke its 5-week winning streak today. This was the first week that we've had a really, really tough time. We came out of the box pretty quickly this year. I mean, all the indexes, the S&P 500, the Dow Jones, NASDAQ, Russell 2000, everything is doing very well this year, with the NASDAQ leading the pack at 31.4%. That's just from January 1st to June 16th. This is a laggard as of Friday. Again, we pulled back a little bit this week. But information technology, communication services, consumer discretionary, these are the things that are just doing extremely, extremely well. And what's interesting is that they were the 3 items or the 3 sectors that were doing very poorly last year. They were the bottom 3. And just one little interesting fun fact, and some names that you may know a little bit about. These 8 companies, Alphabet, which is also Google, it's the parent company of Google. So I asked my clients that I always do a little test. I'm like, do you know what Alphabet is? And most of them don't, but then I said, how do you search for things? Well, I Google it and bingo, there you go. So Alphabet, Amazon, Apple, Meta, Facebook, Microsoft, Tesla, Netflix, and Nvidia now make up 30% of the S&P 500's market capitalization. So all of those companies represent 30%. That's up from 22% at the start of the year. And a lot of that has to do with Nvidia. NVIDIA is a microchip company, and they have just been, I had a certified financial analyst on, and he's been on a couple of times, Paul Meeks. He's on CNBC a lot as well. And he's been on the show, my show, and he's, talked about NVIDIA. It's one of his babies, and it hadn't done well for quite some time. It kind of, not that it has done well, but it was very flat. And the baby just really grew up fast. It did really, really well this year. So it's a very interesting thing. So what that tells us, though, is that it's all concentrated in one area. And that's great if you're in it, but then when everything changes and things go to the other side, things fall pretty precipitously. So you just have to be really careful in what you're doing. So the second quarter will be ending next week on June 30th. I can't believe we're halfway through the year almost. I will tell you that the statements will probably look pretty good, barring what happens next week. We are definitely up from where we were the end of the first quarter, which was quite a dichotomy from last year when, and I've been going through this with my clients when we meet, that in 2022, the first quarter statements were down, and the second quarter statements were further down, and the third quarter statements were down the most. And then, of course, we bounced back a little bit in December, which, of course, makes sense as to why we are doing very well this year. When things pull back, obviously people look for bargains. We all do, right? So everybody's getting in there. The technology's going in there and buying things, but that's really moved up the market. So when we have a week like this, we can't cry yet. It just happens, when things get a little bit too hot, things pull back. So it's okay. No reason to fret. I'm not going to say we're out of the woods. I mean, we still got the Fed looking to raise rates once, maybe possibly two more times. But then end of the year, beginning of the year, reducing rates. Anytime they do that, it kind of sets the market into a bit of a spiral. So we'll have to see what's going on with that. But the question many people may have in mind, or maybe not, but is the market in a bubble? Right? So there's this gentleman. He is a professor of finance at Wharton School of the University of Pennsylvania and a senior investment strategy advisor to Wisdom Tree Funds. And his name is Jeremy Siegel. And he had an article, and I'm just going to kind of go over a few things that I thought were interesting. So he feels that the market is not in a bubble. So he's saying amid fears of the recession, the S&P 500 is up more than 14% this year. And artificial intelligence, or AI stocks, which you might have heard that on the news, or it's kind of a buzzword right now, but that AI stocks have risen many more times than that. So he's saying that valuations, which is how we value stocks, are miles away from the peaks of the dot-com era. People remember the 2000s. Well, some of you may not, but in the early 2000s when we had the dot-com buzz where, companies were doing 100%, 120%, tech companies. So he's saying they're miles away from that these companies now that are moving up are real companies, and they're not the product-less dreams of the dot-com entrepreneurs. If anyone remembers pets.com, well, the company doesn't exist anymore. So, he says we use the term bubble too quickly, but the valuations are that are 200 to 400% above fair value, which may not even apply to NVIDIA. So, like I said, NVIDIA had done very, very well, but we're not even seeing valuations that high. And he had indicated that we still have a lot more to go. There's a momentum in the market. It's very strong, and it can persist for the long term. But pullbacks can be very quick, and we've seen that. But the thing that you have to do is not let emotion dictate what you do. If things pull back, don't sell. Hold on and just wait for the next momentum, because it will come. So what other things did he say that were of interest? He's saying the capital investment in artificial intelligence has soared. Approximately $14 billion was dedicated 10 years ago, but in 2021 that number reached $276 billion. And the U.S. is responsible for 54%, followed by China at 15%. So we're really banking on this thing, But again, the bottom line he's saying is listen, warned you against investing in AI-related companies. The things that come out quickly don't necessarily mean they're going to be the ones that are going to be there for the long term. During the dot-com era, we heard companies Netscape, Mosaic, WordStar, WordPerfect, Lotus 123, and Harvard Graphics. They're not around anymore. So just be careful out there, kids. We're not going to implode. Everything is going to work out, but it's going to be a wild ride, so stick with it. Again, you're listening to the Financial Chick Show. I'm the Financial Chick, the company's Diversified Financial Solutions. Listen, I want to thank you for tuning in with me today. I hope it gave you some good nuggets of information. Remember, let's try to do better and be better. Be safe, and I will see you next Friday. All right, and that is all she wrote. Have a wonderful weekend, everybody. Dodging the rain. I don't know if we're gonna get rain, but I don't know if we're gonna get sun. But whatever you do, enjoy, and I will see you next Friday. Bye.